All right, we'll look into the categorization as it happens, but that's on the cards. Sharad, thanks very much for that. Now, even as the war in Europe rages on, the International Energy Agency's Fatih Birol has said that the world is going through its first global energy crisis. It's the first one, he says, and this comes after the OPEC Plus, and that includes Russia, have announced a massive 2 million barrel per day supply cut of crude oil. Birol is saying that the cut is going to impact nations that are already under pressure, and it's likely going to push many nations into recession. The IEA Executive Director, Fatih Birol, is saying that oil consumption is expected to grow by 1.7 million barrels a day in 2023, and Russian supplies are going to be crucial in all of this. He believes that the energy crisis may well be a turning point towards the acceptance of cleaner energy sources. We're talking about alternative energy. Now, on the other hand, Mukesh Ambani is saying that if the world is too hasty to jump towards renewable energy, it may destabilize the global economy, and he believes that investments in oil and gas should not continue to fall. So where does the truth lie? Let's find out from our experts. Anurag Singh is of course, joining us right now, along with our other guest tonight. Let's find out first from Anurag what you see. Of course, Peter Cardillo is also with us. Great to have you both, gentlemen. But coming to you first, Anurag, now the International Energy Agency is seeing this as the first truly global energy crisis, like I was telling our viewers. How deep, in your opinion, does the crisis really run? And what are the chief ramifications that you envisage?
So, Vikram, first of all, to you and all your viewers and whoever is listening to us, a very happy and prosperous Diwali. Vikram, I see it in two ways. One is the extent of rise or fall in oil prices will depend on how deep or shallow the recession we end up having in US and globally. We also have to understand that while there is a limited supply of oil and OPEC wants to control that prices by, increasing or reducing production, the reality is that if the world goes into recession, there is anyways going to be 8 to 10% drop in the oil demand, which anyways will bring about, the level of parity with the production as well, right? So that is one thing to watch. Second is that then the picture is going to be slightly different in US, at least till November, because Biden government here is pumping all the oil from strategic petroleum reserves. So at least till November elections, it's funny, but it happens in India as well. It happens here as well. The prices of oil are unlikely to fluctuate much. So I think December onwards is when we will begin to realize how strong the global economy is, and then eventually the oil will try and find its balance. Finally, I think one more thing we'll have to keep in mind that ultimately there is a kind of a undeclared cartel emerging between China, Russia, OPEC, Saudi Arabia. So I think we have to watch out for that, because as the Western powers consolidate their positions, I think we can expect a retaliation from the other camps. I don't see oil falling below 90 in any situation, Vikram.
Fair enough. If those prices stay at current levels, Peter, what is the likelihood now of that rebound in Chinese demand, at least for products like LNG? What are the factors that will determine future Chinese demand that might alter the kind of pricing that we are seeing on oil right now with the kind of supply issues that OPEC Plus has presented to us?
There's no doubt that the energy sector is in a global crisis. But there are ample supplies out there. In fact, if you read the article that came out from the IEA, they specifically said that if energy prices rose to unsustainable levels, that they would tap their oil reserves. And let's not forget that that's not only coming from them, but on a global scale, but it's coming from other countries, especially here in the United States. Now, grant you that oil supply reserves normally are not a long-lasting effect, but I take the opposite view in terms of the global economic outlook. With the central banks around the world continuing to raise rates, in spite of the fact that there might be a pause here by the end of the year by the Federal Reserve, there's no doubt in my mind that we're headed for a global recession. And during that global recession, demand will falter. And cheating among the OPEC group is likely to intensify. And that means a lid on oil prices. While I'm not overly bearish on the outlook for oil, I think in the near future, we could see oil prices drop down to around $75, $77 a barrel. And that brings us to another question of natural gas. Now there, I remain positive because I believe the war factor is, especially during the winter, is likely to drive up gas prices even further. Now, that doesn't mean that there isn't an ample supply of natural gas. Obviously, there is.
Yes.
But the question is, how do you get it to the countries that need it the most?
And that's really the big question right now, because with Nord Stream and the problems that we've had on that count, whether it's sabotage, it's not, is irrelevant at this point in time. We are looking at a very long and bitter winter for Europe for sure. Anurag, in that kind of scenario, as far as the energy security of many emerging economies like India is concerned, how do you rate it? Do you see this as an opportunity for a move towards renewables, or do you think it's too early to talk like Mr. Ambani is suggesting?
So Vikram, that's an interesting one. Let's look at it in two parts. Look, I am less. I think India would be fine because, as I say, there is a kind of undeclared cartel emerging. India has no objections looking at the color of the oil. It can take oil from Russia, and so is China. So I think these countries can kind of create that much needed balance in the international market, while they can divert Russian oil and even the negotiations are even on from some of the other countries as well. But and the Western powers can take the oil that they have from the powers that they like. Right, so I think between, as long as 90 to 100 oil stays between this, I think RBI also said that they've accounted for a $95 oil. I think we should be fine. Anything above that would be a bit of a shock. Let's look at the European side, Vikram. I think there the governments need to have what I call as a mature conversation with their citizens, right? We see protests happening across France. We see those, some propelled by unions, some propelled by opposition parties. But eventually, if you see the conversations that are emerging, for example, French workers want a wealth sharing from oil companies in form of higher wages. Governments want a capping on the profits in the name of windfall tax. I think the governments in all European countries, and I think UK is a very good example. I think we are in a position where the markets have sent a signal, and UK's case is a case in point, where governments do not have this option of financing today's energy needs by raising more debt. Right. So it will either have to come from more taxes, or the governments will have to be very expedient and adopt austerity measures. Either ways, they're not going to be liked by people in general. So all the governments across, I think, especially in European Union, need to have a very mature conversation with people that, look, these prices are here to stay. Either they come from taxes or you directly pay them. But there is a price to pay.
So stability in prices is something that governments and people across the world really require right now, because otherwise it's very difficult to fight recessionary pressures, the kind of inflation that we are seeing. You cannot plan for the future too much. Do tell us, Peter, the need for Russian oil, like you also pointed out, it's getting more and more intense. Do you see that scenario changing, where concessions are made despite that ongoing war between Russia and Ukraine and the consequent sanctions against Russia, and the belief that the price cap mechanism may not quite work in keeping Russian oil out of global supply chains? Something else that you were alluding to.
Exactly. And, speaking about Russia, basically Russia was the mastermind in OPEC, as far as I'm concerned, was the mastermind in OPEC's decision to cut production. Obviously, it was a political move, and I believe that, as I said before, that move is likely to come back to come back to haunt Russia. Now, in terms of the war, it's not looking all that great for Russia, and so I'm not sure the time frame, but I think we might be seeing some sort of a move towards a peace agreement between Russia and the Ukraines. If that were to happen, again, that would be another nail in the coffin for energy prices, because at that point, obviously, Russian oil would probably filter its way through the market, and some of those sanctions would be removed. So for now, it's a sticky situation for Russia, and they're quite desperate in terms of revenues. They need those oil revenues.
They do, because their economy is in a bad shape too. And of course, that is only to be expected. But of course, as far as emerging markets, I was talking about that, India is concerned, we over here have committed to turning net zero by 2070. Though, of course, it still derives the majority of its electricity from coal here in India. And of course, we've been speaking so much about ethanol blending. I don't know exactly how quickly things can move, but necessity, like they say, is the mother of all invention. And perhaps that's the way to go, and not just for India, for many economies around the world, as we deal with supply side concerns and the uncertainty of prices. But thanks very much for joining us, Anurag and Peter. It's always a pleasure getting a perspective on various topics that we take up every day here on India Tonight.